Based on the historical data and forecast, Bitcoin has shown a mixed trend with periods of consolidation and slight upward movement. The RSI consistently fluctuating around the 60 to 70 range suggests that the asset is neither strongly overbought nor oversold. The Bollinger Bands have been widening, indicating increasing volatility. The forecast for the next week predicts a range-bound movement around $107,000, with slight dips and recoveries. Considering these factors, I recommend a moderately bullish strategy focusing on short-term pullbacks. My strategy involves a combination of RSI and Bollinger Band signals. We will initiate a long position when the price touches the support level of $104,800 and the RSI dips below 55.0, indicating a potential oversold condition. The entry price will be $104,800. To manage risk, we will set a stop-loss order at $104,000. The target price will be $107,200, aligning with the forecast and the upper Bollinger Band. This strategy aims to capitalize on short-term bounces while mitigating potential losses with a well-defined stop-loss. The potential profit is $2,400 with a risk of $800. Based on the historical data and forecast, Ethereum shows an overall upward trend, supported by consistent bounces off the 2520 support level and recent forecasts indicating further price increases. The RSI fluctuates between 57 and 73, suggesting periods of both oversold and overbought conditions. Considering the RSI and Bollinger Bands, I recommend a combined strategy. Initially, we will implement a buy strategy when the RSI falls below 60, targeting the 2780 resistance level. The entry price will be $2,690, with a stop-loss set at $2,530 to protect against potential downturns. The target price is $2,780, aiming for a substantial profit. Subsequently, as the price approaches the 2780 resistance, we will shift to a strategy based on the Bollinger Bands. When the price touches the top of the Bollinger Bands, we will consider selling to secure profits. Specifically, when the price reaches $2,740, we will sell, placing a stop-loss at $2,710 and a target price of $2,690. This combined approach leverages both momentum indicators and volatility bands to maximize potential returns while managing risk effectively. This strategy prioritizes capitalizing on the upward trend while incorporating risk mitigation techniques for a balanced portfolio. Based on the historical data and forecast, XRP shows a slightly downward trend with periods of consolidation. The RSI consistently fluctuates between 37.8 and 56.4, indicating neither strong overbought nor oversold conditions. However, the recent dip in RSI towards 37.8 suggests a potential oversold opportunity. The Bollinger Bands show that the price is currently near the lower band, which could signal a potential bounce. Therefore, I recommend a moderately aggressive strategy focusing on short-term gains. My suggested strategy is to enter a long position at $2.16. The stop-loss should be set slightly below the support level at $2.13 to protect against further downside risk. The initial target price is set at $2.32, aligning with the center of the Bollinger Bands and a reasonable profit margin. If the price reaches $2.32, we can reassess the situation and potentially extend the target price to $2.4 based on the recent resistance levels. This strategy combines RSI and Bollinger Bands to identify potential entry and exit points, aiming for a balance between risk and reward. Based on the historical data and forecast, BNB shows a slight upward trend, consistently trading between the support price of $664 and the resistance price of $686. The RSI indicator fluctuates between 50.9 and 70.5, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation before a potential breakout. Considering the current RSI around 55.1 and the forecast prices slightly above the center of the Bollinger Bands, I propose a moderately bullish strategy. We will enter a long position at $674, placing a stop-loss order at $660 to mitigate potential downside risk. The initial target price will be $678, aiming to capitalize on the anticipated upward movement based on the forecast. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we'll enter a long position at the prevailing price with a stop loss at $664 and a target price of $685. Conversely, if the RSI exceeds 75, signaling an overbought condition, we'll consider a short position with an entry price at the current level, a stop loss at $674, and a target price of $660. Combining these approaches, the portfolio will prioritize long positions when the RSI is below 30 and the price is near the support level, and short positions when the RSI is above 75 and the price is near the resistance level. The final portfolio will be a weighted average of the two strategies, with a 60% allocation to the long position and a 40% allocation to the short position. Based on the historical data and forecast, Solana exhibits a downtrend, particularly evident in the recent days with a decline from $179 to $156. The forecast for the next week projects a continuation of this downward trajectory, with prices ranging from $162 to $154. The RSI consistently dips below 50, reaching as low as 41.5, indicating oversold conditions. Considering the support price consistently at $156 and the forecast price of $162, I recommend a short selling strategy. Enter a short position at $162, placing a stop-loss order at $165 to protect against unexpected upward movements. The initial target price is $156, aligning with the established support level. To refine this strategy, I incorporate the Bollinger Bands. The recent price action has consistently traded below the moving average, suggesting a bearish momentum. If the price touches the upper band of $183, it's a strong signal to avoid shorting. Therefore, I will implement a tiered target approach. The first target remains at $156. If this level is breached, the second target is $154, based on the forecast. The final portfolio will be 60% short selling strategy, 30% RSI strategy, and 10% Bollinger Band strategy. This balanced approach aims to capitalize on the prevailing downtrend while mitigating risk through strategic stop-loss placement and tiered target prices. Based on the historical data and forecast, Dogecoin exhibits a downward trend. The RSI consistently falls below 60, indicating weakening momentum, and the forecast prices continue to decline, reaching $0.19. The support price remains steady at $0.182, suggesting a potential floor. I recommend a short position strategy. The entry price should be $0.205, coinciding with the initial forecast price. Set a stop loss at $0.21, just above the upper Bollinger Band, to protect against unexpected upward spikes. The target price should be $0.182, aligning with the established support level, aiming to capitalize on the downward trend. To refine the strategy, incorporate the Bollinger Bands. When the price touches the upper band, consider tightening the stop loss to $0.208. Conversely, if the price approaches the lower band, consider reducing the position size to mitigate risk. Given the consistent downward trend and the RSI consistently below 60, this short position strategy offers a high probability of success. The expected profit is $0.205 plus $0.182 is equal to $0.023 per coin. The risk is $0.21 plus $0.205 is equal to $0.005 per coin. The risk-reward ratio is 4.6. Based on the historical data and forecast, TRON shows a slight upward trend with price fluctuations within the support and resistance levels of $0.266 and $0.278. The RSI values fluctuate between 49.5 and 66.8, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. Considering the RSI and Bollinger Bands, I recommend a strategy that combines trend following and mean reversion. We will initiate a long position when the price touches the support level of $0.266, with a stop loss placed just below the support at $0.265. The initial target price will be the resistance level of $0.278. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. If the price reaches $0.266 and the RSI is below 50, we enter a long position at $0.266 with a stop loss at $0.265. If the price approaches the upper Bollinger Band, we will take partial profits at $0.275. If the RSI reaches 80, we will exit the remaining position at $0.278. Given the forecast, the price is expected to remain around $0.27, so a conservative approach is warranted. This strategy aims to capitalize on short-term price movements while mitigating risk through strategic stop-loss and target levels. Based on the historical data and forecast, Cardano has shown a downtrend from May 20, 2025, to June 9, 2025. The price has consistently tested the support level of $0.685, and the RSI has been fluctuating below 50, indicating a bearish momentum. The forecast for the next week projects a continuation of this downtrend, with prices hovering around $0.709 to $0.687. Considering the RSI oversold level of 20 and overbought level of 80, we will implement a contrarian strategy. I recommend a short position entry at $0.711. The stop loss should be set slightly above the recent high at $0.711 plus $0.02, which is $0.731. The target price will be the support level of $0.685, aiming for a profit of $0.711 to $0.685, which is $0.026. Furthermore, the Bollinger Bands also support this strategy. The price is currently near the upper band, suggesting a potential pullback. A short position aligns with this expected price correction. The strategy combines RSI and Bollinger Bands to confirm the bearish trend and identify optimal entry and exit points. The portfolio will prioritize the short position with the specified entry, stop loss, and target prices. This approach aims to capitalize on the anticipated downtrend while mitigating risk with a well-defined stop loss. The expected return is $0.026 per Cardano. Based on the historical data and forecast, Sui has shown a downtrend with significant volatility. The RSI consistently dips below 50, reaching as low as 37.5, indicating oversold conditions. The forecast suggests continued downward pressure, with prices hovering around $3.45 to $3.47. Considering these factors, I recommend a contrarian strategy focusing on potential rebounds. We will initiate a long position when the RSI falls below 20, specifically at $3.25. A stop-loss order will be placed at $3.15 to mitigate potential losses if the downtrend continues. The initial target price is set at $3.6, aligning with the recent resistance levels. To refine this strategy, we'll incorporate Bollinger Bands. When the price touches the lower band, indicating an oversold condition, we'll enter a long position at $3.32. The stop loss will be positioned just below the lower band at $3.2. The target price will be set at the middle band, $3.5. If the price breaks through the resistance level of $3.8, we will take profits and consider a short position. This combined approach, leveraging both RSI and Bollinger Bands, offers a balanced risk-reward profile, aiming for high returns while managing downside risk effectively. Based on the historical data and forecast, Chainlink demonstrates a downward trend. The price has been fluctuating around the support level of $13.9, and the forecast indicates a continued decline towards $13.6. The RSI consistently dips below 50, reaching a low of 37.9, suggesting an oversold condition. Considering this, I recommend a short position strategy. Enter short at $14.5, placing a stop-loss order at $14.7 to protect against a potential upward reversal. The initial target price is $13.8, aiming to capitalize on the anticipated downward movement. To refine this strategy, incorporate the Bollinger Bands. The price has been approaching the lower band, which suggests a potential bounce. If the price reaches $13.8, we can consider covering the short position. If the price breaks below $13.8, we can tighten the stop loss to $13.7 and set a new target price of $13.6. This combined RSI and Bollinger Bands approach offers a balanced strategy, capitalizing on the downward trend while mitigating risk through strategic stop-loss adjustments. The portfolio will be 70% short position, 30% cash. Based on the historical data and forecast, Pendle shows a mixed trend with periods of volatility. The RSI fluctuates between 47.0 and 70.4, indicating occasional oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increasing volatility. The support price remains consistently at $3.94, while the resistance is at $4.65. Considering the recent price action and the forecast for the next week, I recommend a moderately bullish strategy with a focus on short-term gains. My strategy involves entering a long position at $4.3, coinciding with the forecast price on June 3, 2025, when the RSI is around 61.1, which is not yet overbought. The stop-loss should be set at $3.94, just below the established support level, to protect against a potential downside reversal. The target price is $4.65, the resistance level, aiming for a profit of $0.35. This strategy combines RSI and Bollinger Bands analysis to capitalize on short-term price movements while managing risk effectively. The predicted price movement based on the Bollinger Bands is bullish, as the price is expected to stay within the upper band. Based on the historical data and forecast, Aave shows a generally upward trend, with recent consolidation. The RSI is fluctuating but currently around 61.1, indicating neither overbought nor oversold conditions. The Bollinger Bands are expanding, suggesting increasing volatility and potential for price movement. Considering the support price of $222 and the resistance of $271, I recommend a long position strategy. We will enter a long position at $246. The stop-loss will be placed slightly below the recent low at $240 to protect against a sudden downturn. The initial target price will be the resistance level at $271, aiming for a significant profit. To refine this strategy, we will incorporate the Bollinger Bands and RSI. If the price breaks above the upper Bollinger Band, indicating strong upward momentum, we will adjust the target price to $277. Conversely, if the RSI drops below 30, suggesting an oversold condition, we will tighten the stop-loss to $242. This dynamic adjustment will allow us to capitalize on the upward trend while mitigating potential losses. The portfolio will be 60% long Aave, 30% in stablecoins, and 10% in other altcoins for diversification. Based on the historical data and forecast, Arbitrum shows a declining trend with increased volatility. The RSI consistently fluctuates, dipping below 40 in the recent past, suggesting oversold conditions. The Bollinger Bands indicate periods of contraction and expansion, reflecting the price swings. Considering these factors, I recommend a contrarian strategy focusing on short-term gains. We will initiate a long position when the RSI reaches an oversold level of 20 or below, anticipating a bounce. Specifically, when the RSI drops to 39.2 on June 2, 2025, we will enter a long position at $0.333. The stop-loss will be set slightly below the support level at $0.32 to protect against further downside risk. The initial target price will be the resistance level of $0.376, aiming for a quick profit. To refine the strategy, we will incorporate the Bollinger Bands. If the price approaches the lower band while the RSI is oversold, it strengthens the buy signal. The forecast data suggests a price range between $0.343 and $0.369 in the coming week. If the price rebounds towards the middle of the Bollinger Bands, we can adjust the target price to $0.36. If the price breaks through the resistance, we can consider raising the target price to $0.376. The final portfolio will be a long position at $0.333 with a stop-loss at $0.32 and a target price of $0.36, leveraging both RSI and Bollinger Bands for enhanced profitability. Based on the historical data and forecast, Pepe shows a slight upward trend with fluctuations. The RSI values have been oscillating between 45 and 71, indicating periods of both overbought and oversold conditions. The Bollinger Bands have been contracting recently, suggesting a potential for increased volatility. Given the current RSI of 49.8 and the forecast prices remaining relatively stable around $0.0000130, I recommend a long position strategy. We will enter a long position at $0.0000125. The stop loss will be set at the support price of $0.0000116 to protect against a potential downward reversal. The initial target price will be $0.0000130, aiming to capture a portion of the anticipated upward movement. To optimize the strategy, we will incorporate a trailing stop loss based on the lower Bollinger Band. If the price rises to $0.0000130, we will adjust the stop loss to $0.0000125. If the price continues to rise, we can consider a second target price of $0.0000135. This approach allows us to capitalize on the upward trend while mitigating potential losses. This blended strategy combines the benefits of RSI-based entry, Bollinger Band-based stop-loss adjustments, and price action-based target setting, aiming for a balance between risk and reward. Based on the historical data and forecast, Ether.fi has shown considerable volatility with periods of both upward and downward trends. The RSI consistently fluctuated, dipping below 55, indicating periods of oversold conditions, particularly between May 31 and June 2, where it fell as low as 47.4. The Bollinger Bands also reflect this volatility, with the price frequently touching both the upper and lower bands. Considering the recent oversold RSI readings and the forecast prices hovering around $1.3, I propose a long entry at $1.14. The stop loss should be set at $0.51 to protect against significant downside risk, aligning with the established support level. The initial target price would be $1.3, aiming to capitalize on the predicted upward movement. To refine this strategy, I'll incorporate Bollinger Band signals. When the price touches the lower band and RSI is below 50, it suggests a potential buying opportunity. Given the forecast for the next week, I anticipate Ether.fi to remain within a range. Therefore, if the price retraces to $1.24, a second entry could be considered. The stop loss for this entry would be $1.1, and the target price would be $1.38. Combining these two positions, we aim to achieve high returns by capitalizing on both oversold RSI and Bollinger Band signals, while mitigating risk with well-defined stop loss levels. Based on the historical data and forecast, Kaia has been experiencing a downtrend recently, with the price fluctuating between a support of $0.0999 and a resistance of $0.114. The RSI has consistently fallen below 50, indicating a weakening momentum, and has even dipped into oversold territory below 35. The forecast for the next week projects a continuation of this downtrend, with prices hovering around $0.11 to $0.107. Considering these factors, I recommend a short position strategy. The entry price should be $0.11, with a stop loss placed just above the upper Bollinger Band at $0.126 to limit potential losses if the price unexpectedly reverses. The target price should be set at the support level of $0.105, aiming to capitalize on the anticipated downward movement. To refine this strategy, we can incorporate the Bollinger Bands for additional confirmation. When the price touches the upper band, it signals a potential shorting opportunity, while the lower band suggests a possible exit point. The RSI provides an oversold signal, further reinforcing the short position. The combined strategy involves entering a short position at $0.11, setting a stop loss at $0.126, and targeting a profit at $0.105. This approach balances the trend analysis, momentum indicators, and volatility bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Maker exhibits a fluctuating trend with periods of consolidation. The RSI consistently remains within the 40 to 60 range, suggesting a neutral market sentiment. The Bollinger Bands show a narrowing trend, indicating decreasing volatility. Considering these factors, I propose a moderately bullish strategy with a focus on short-term gains. The forecast price for June 3, 2025, is $1,670, which is near the support price of $1,620. I recommend entering a long position at $1,670. Set a stop-loss order at $1,620, just below the support level, to mitigate potential losses. Aim for a target price of $1,740, aligning with the recent resistance levels and the center of the Bollinger Bands. To refine this strategy, we can incorporate the RSI and Bollinger Band signals. When the RSI dips below 40, it indicates an oversold condition, suggesting a potential buying opportunity. Conversely, an RSI above 80 signals an overbought condition, hinting at a possible sell-off. The Bollinger Bands can help identify potential breakout points. If the price breaks above the upper band, it indicates strong bullish momentum, while a breach below the lower band suggests bearish pressure. Combining these indicators, I would adjust the initial strategy slightly. If the RSI falls below 40, enter at $1,670, set a stop-loss at $1,620, and target $1,740. This portfolio combines trend analysis, support and resistance levels, and technical indicators to maximize returns while managing risk effectively. Based on the historical data and forecast, Eigenlayer shows a volatile trend with periods of consolidation. The RSI has fluctuated between 48.0 and 64.1, indicating occasional oversold and overbought conditions. The Bollinger Bands suggest periods of increased volatility and potential price reversals. Considering the recent price action and forecast, I propose a combined strategy leveraging RSI and Bollinger Bands for optimal returns. We will initiate a long position at $1.47 when the RSI dips below 50 and the price touches the lower Bollinger Band. The stop-loss will be set at $1.21, just below the lower Bollinger Band, to mitigate potential losses. The initial target price will be $1.6, aligning with the historical resistance level. To maximize returns, we will implement a trailing stop-loss strategy. Once the price reaches $1.6, we will adjust the stop-loss to $1.43, the center of the Bollinger Bands, securing profits while allowing for further upside potential. If the price continues to rise, we will adjust the stop-loss further to $1.51. The final target price will be $1.56, based on the forecast data. This combined approach, incorporating RSI and Bollinger Bands, aims to capitalize on both momentum and volatility, providing a robust strategy for Eigenlayer investment. Based on the historical data and forecast, Dogwifhat has shown volatility, with a recent dip followed by a slight recovery. The RSI consistently fluctuated, but recently entered oversold territory, below 45, suggesting a potential bounce. The Bollinger Bands indicate periods of high and low volatility. The price is currently near the support level of $0.548. Considering the oversold RSI and the forecast showing a slight upward trend, I recommend a long position. Entry price should be $0.887. Set a stop-loss at the support level of $0.548 to mitigate potential losses. A conservative target price would be $1.05, based on the center of the Bollinger Bands and the forecast. To refine this strategy, we can incorporate the Bollinger Bands. If the price breaks above the upper band, $1.24, it signals strong upward momentum, and we can adjust the target price to $1.24. Conversely, if the price falls below the lower band, $0.834, it indicates increased selling pressure, and we should consider tightening the stop-loss to $0.834. This dynamic approach, combining RSI and Bollinger Bands, allows for adaptability to changing market conditions, aiming for high returns while managing risk effectively. The portfolio is composed of the most efficient of the three strategies, which is the long position with a dynamic stop-loss and target price based on Bollinger Bands. Based on the historical data and forecast, ApeCoin has shown volatility with a recent upward trend. The support price is consistently at $0.615, while the resistance is at $0.715. The RSI fluctuates between 47.6 and 65.3, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price has recently been near the upper band, suggesting a potential pullback. Considering these factors, I recommend a strategy that combines RSI and Bollinger Bands to capitalize on potential price movements. My proposed strategy involves a long position with an entry price of $0.698. The stop loss should be set just below the support level at $0.615, providing a buffer against unexpected declines. The initial target price is $0.712, aligning with the forecast for the week. If the price reaches this target, we will reevaluate based on the RSI and Bollinger Bands. If the RSI approaches 80, consider taking partial profits. If the price breaks above the upper Bollinger Band, we can adjust the target price to $0.755. This approach aims to capture gains while managing risk effectively, leveraging both technical indicators and support/resistance levels.